Welcome to this channel. Without wasting your time, in this video, I'll be teaching you what you need to know about Binance margin trading. Margin trading is for professional traders, but if you know how to trade cryptocurrency margin markets on Binance, you will make money because Binance have so many tools to help you make informed trading decisions. Please, if at the end of this video you find it helpful to you, subscribe to the channel to help me grow the channel faster, and hit the notification bell so you can be receiving my new video. Now, getting familiar with Binance margin trade or margin trading. In the first place, what is Binance margin trade or what is margin trading? Margin trading is a method of trading assets using funds provided by a third party. That is a type of trading that is trading assets using a borrowed fund. That is what margin trading is all about. You are not trading totally with your money. You are trading with partly your money and the money that you borrow from a third party. Margin is the money you initially deposited into your own account. Let's say you deposited 5,000 USDT in your account to borrow more assets to trade with. Let's say you deposit 5,000 USDT or BUSD in your margin trading account. You now borrow another 20,000 or 15,000 BUSD or USDT, making it, if you borrow 15,000 BUSD and you have 5,000 BUSD, so that is you have 20,000 BUSD to trade with. Traders buy on margin to increase their trading power and leverage gain. With margin trading, you gain more because you have margin now to increase your trading power. When compared to regular trading accounts, margin accounts allow traders to access greater fund of capital, allowing them to leverage their positions. Essentially, margin trading amplifies trading results so that trader can realize larger profit on successful trade. This ability to expand trading result makes margin trading especially popular in low volatility markets, particularly the international forex market. Still, margin trading is also used in stock, commodity, and cryptocurrency. You wouldn't normally borrow margin from a broker in crypto trading. The exchange or the other trader will provide you with the fund instead, allowing them to earn interest based on the market demand for this feature. So in crypto trading now, the money we are borrowing, it is being provided by the users of the exchange. The user of the exchange or the exchange itself or other traders, so they too can earn interest on the money they are borrowing other traders. In traditional markets, the borrowed funds are usually provided by an investment broker. In cryptocurrency trading, however, funds are often provided by other traders who earn interest based on market demand for margin funds. Although less common, some cryptocurrency exchanges also provide margin funds to their users. Margin is only a tool to create so-called leverage, which is presented as a ratio of 3x, 20x, or 100x, etc., etc. Margin is just a tool that we call leverage, and it is presented maybe times 3 of your margin fund, maybe times 20 or times 100. It can be times 50, it can be times 200. Margin trading is a method of trading assets, which in this case are crypto assets, using borrowed funds from a third party. This gives you the ability to enter position larger than your current account balance. in comparison with spot trading that allows you to make profit from only your current crypto asset. Margin trading allows you to amplify your trading results by giving you access to more capital. Now, example, the case study. Let's take a case study. Say you have 10,000 BUSD and want to try margin trading, so you choose a cryptocurrency exchange that offer a leverage of ×3 of your margin fund. This means you'll be able to borrow 20,000 BUSD from the exchange in addition to your 10,000 BUSD. Now, what we are saying is that you have 10,000 BUSD in your margin account, and you are in an exchange that offer ×3 of what you have. So now 10 times 3, that is 30. 10 times 10,000 BUSD times 3 is 30,000 BUSD. So what you need more to complete that 30,000 BUSD is 20,000 BUSD. So you will get that 20,000 BUSD from the exchange. Now you have 30,000 BUSD to trade, meaning you could make more profit as you trade higher volume. If you believe Ethereum price will increase, you may decide to sell the full 30,000 BUSD for 20 Ethereum at a price of 1 Ethereum per 1,500 BUSD. Say the price jump 16 hours after you purchase and you sell 20 Ethereum at the price of 2,000 BUSD per Ethereum. You will now have 40,000 BUSD. Let me explain myself. What this scenario is painting to us that we have 30,000 BUSD now to trade. Now we choose Ethereum BUSD. At the price when we want to make the transaction, the price of Ethereum, of 1 Ethereum per BUSD is 1,005. So with that, I will be able to buy 20 Ethereum with my 30 BUSD. Now, after 16 hours, the price of Ethereum rose from 1,500 BUSD to 2,000 BUSD per Ethereum. So I now decide to sell my 20 Ethereum. So my 20 Ethereum at that point, if I sell it, I will have 40,000 BUSD. 20 Ethereum times 2,000 BUSD. Now, look at how I'm going to repay my loan, my margin. So I need to repay my lender that I borrowed 20 BUSD from, plus their interest. Let's say if the interest rate is 0.01% for every 4 hours, then I will pay 0.04% of 20 BUSD, which is 8 BUSD for 16 hours. Now I will have 19,992 BUSD, having made a profit of 9,992 BUSD. So if I remove their 20,000 they borrowed me first, I have 20,000 with me. So if I remove 8 BUSD from that 20,000 that is with me, so what I'll be left with is 19,992 BUSD. So my profit now, since my initial money is just 10,000 BUSD, my profit from that 19,992 BUSD will be 9,992 BUSD. Can you see? Very large profit. But a sign of warning, this doesn't happen all the time. Ethereum price may drop by 20% the next day, leaving me with only 24,000 BUSD in my account. That is what my trading has reduced to, from 30,000 BUSD to 24,000 BUSD now. And I'm still owing 20,000 BUSD plus interest. So after returning my debt to the exchange, I'll be left with about 4,000 BUSD, meaning that I have lost more than 50% of my fund. If I'm left with 4,000 BUSD, this means that I've lost 6,000 BUSD. As you can see, the higher your gains with the margin trading, the bigger the hit you will take if something goes wrong. As I said, margin trading is not for beginners, it's for professionals. But a beginner can start learning how to engage in margin trading. Now we move on to how to open Binance margin account. Now, if you want to open Binance margin account, you log on to your Binance account that you have opened. You can watch our video on how to register new Binance account and watch our video on how to verify your account. If you have registered your account and you have verified your account, log on to your account. Over your cursor to trade, and click on margin. This will take us to a page that will create our margin account, because you need to have a margin account before you can enter margin trade terminal. Now, your own terminal will not come here directly. The first time you click on margin, you will need to answer questions from Binance about Binance margin trading, and you need to answer all the questions. Binance may bring about 8 questions before, but they will ask you about your understanding of margin trading. So it's only when you pass that questionnaire. So when you pass that questionnaire, now your terminal would turn to something like my home. Now this one is showing me now that I have a margin account. The margin account. You have to pass the questionnaire. You have to pass the questionnaire. We will still talk about the questionnaire in my upcoming video. So now, after you get to this place, so you over the wallet at this top here, then you see margin. You click on margin to go to your margin wallet or margin account. So when you get there, you can transfer money to your margin account, transfer funds to it, deposit money to it. So as you can see, so this is my margin account. So I can borrow money, I can repay, I can transfer from my sports wallet, I can transfer from my fiat and spot wallet to my margin wallet. You cannot trade with money that you have in your spot wallet. You cannot use it to trade in margin trading. You have to transfer money or fund, to your margin account. Now, you want to transfer to your cross account, you want to transfer to isolated account, you see it here. We'll talk about cross account and isolated account in one of our videos to come. So this is just about how to transfer. Let's say if I want to transfer, click on transfer. Spot, I want to transfer from my fiat or spot, or I choose anywhere that I want to transfer. Then where am I transferring to? I transferring to my cross margin, then choose the coin. So I'm choosing let's say I'm choosing then I put the amount, then I'll confirm it. So usually I do that, and the money will be transferred to my margin account. So that's the end of our video. Thank you very much for watching to the end of this video. Please, if you like the video, like the video and share the video with your friends and family. Comment on the comment section of the video, and if you have any question, you can put it on the comment section. I will answer also. If you have not subscribed to the channel, please don't forget, subscribe to the channel to help our work, and hit the notification bell so that you can be receiving our new videos whenever we release them. The link to this margin trading or margin wallet, we're going to put it in the description. Make sure you click on it to always take you directly to Binance, and to know that you are using the original link. I will take you to Binance margin trading. Thank you.